Hey there, welcome to Solana Wyckoff Technical Analysis session. So it's been a while since I last covered Solana. It's almost 2 weeks. So let's see what has happened and where Solana is heading to. This is the weekly chart of Solana. And 2 weeks ago we were still at the leg up that broke above the original upward channel box. So it's time to first adjust the box while we see like two consecutive weeks of decline, but that's okay. Um, let's do this one by one. So let's adjust the channel box so that it covers better what's going on. So I just want to make sure these wicks and these candles are covered, and just need to adjust this a little. That's about right. So the idea of the channel box is, if we look at the line chart, we see basically the price will bounce between the two edges, or like the center line of the box. So we have adjusted the box, but we haven't adjusted the center line. So now it's the time to get this done. Well, when looking at the line chart, you probably wonder like how to adjust the center line. The center line itself isn't necessarily the mid section of the box, so it doesn't have to line up with the center of the box entirely. The key is how frequent the trading activities are in the middle of the box. So it can align closer to the bottom edge, or it can align closer to the ceiling. So here you see these candlesticks, all their wicks, or the tails of the candles are around this level. So that's why I draw the line over here. Well, when you are experienced enough, even when looking at the line chart, you know where the line should roughly go to. So that's where it sits. So you see currently it has bounced off from the ceiling of the upward channel box, and now it's has gone through the 210 blue key level all the way, trying to test the bottom of the upward channel box as well as a 180 light blue key level. It's not as bad as heading like touching that level yet. There's still a little bit of room. It stopped right at around 190. So that point was where the this two candlesticks were, or like these two as well. So quite a bit of reference points as well as this test over here. So it's understandable that it's rebound over there because of the intermediate support that it find by referencing these candles. So however, this peak over here, when it bounces off the ceiling of the upward channel box, it's at a lower level compared to the upthrust that happened back in November, or even the second test right after the upthrust. That's January. So we can't exactly call this upthrust of the distribution. Um, you can say it's a failed upthrust of the distribution, but this isn't over yet. So why I'm saying this, I already mentioned it can bounce from the bottom edge, right? So basically it can continue within this upward channel box and eventually challenge the purple key level of 260. So that's one of the possible scenarios. So it's too early to declare that there's no chance for upthrust after distribution. Even though the chance is getting a bit slimmer, it's not completely gone. So I would say I give 35% chance for it to come for an upthrust after distribution, and also the automatic reaction free that correspond to the upthrust after distribution. This will come after that, so I don't have to add the percentage for this. However, a sign of weakness that's having a potential of 65% now. Reason being, if this really comes down and breaks this channel, this upward channel box, and comes down to challenge the green or even the yellow level, that's where we get to the sign of weakness. Looking across the board, we're getting into a very fluctuating period for altcoins, and by looking at this, if the volume continues to build up, that's like a injection of fuel for the bears. Hopefully that doesn't happen that soon. When comparing these volume bars, so look at what happened in the week of September 8th compared to what we're having now. The candlesticks themselves are more or less the same length. So does the volume. So it's not too bad of a situation. Basically, it's equal strength between the bulls and the bears. So that's pretty much it for the past 3 weeks. And then, according to the Wyckoff patterns, if it really ends here and comes down for an accumulation, like it drops maybe below the red key level of 75 to accumulate further, that's another possibility. But it's too early to say now because it probably would take 2-3 more weeks to reach the sign of weakness if it really is coming down for that point. As of now, it's still within the uptrend. Like I said, this is probably not an LPSY. If it really heads towards the UTAD, that's probably what I call PSY3. So for buying climax, we've got a PSY, preliminary supply. Let's enlarge this. And for upthrust, I call that a PSY2. For upthrust after distribution, I call the stage PSY3. So a period of high price range and fluctuations before reaching the actual peak of that short, like partial cycle within the larger distribution cycle. So you see what happened over here, right? That one was a lot more clean, but this PSY over here, you see these fluctuations in the middle. This went straight to the buying climax. Likewise with this, that went to the upthrust. This leg as well, there are fluctuations in between. So we might be going through this PSY3, which is a normal process before it reaches the actual peak. So the chance may be low, but it's not done yet. That's the macro picture. If I switch on the Bollinger Band current squeeze indicator, there's currently no squeeze at the moment, but this purple line on the top has gone into the orange already. The bottom edge is climbing up and the orange is kind of widening or flattening rather than going up. You see this turn over here, right? So when we get into the next few weeks, especially into October, this may form a squeeze, and when the squeeze forms in the weekly time frame, the move of the price would be even bigger. So but then be careful. It swing to the upside, but then see what happens next, right? If you're quick enough, you can probably catch 4 trades, 2 trades up, 2 trades down. So it depends on your trade behavior or preferences. So it's not a bad thing, like whether it swing to the upside or swing to the downside. It's just a matter of how you trade. So remember, in October, a bigger swing may come, maybe near the end of October or early in November. Let's get to the daily and see what's happening underneath the bigger picture. So previously we talked about this pennant over here. So what I said in the previous session was, by the time we get to mid September, a breakout would happen, and it happened right on September 8th, and it broke outside and formed this little peak over here. We can call that an upthrust. So previously I was still asking whether that's the end of the peak, and now it's confirmed, like after 2 weeks when we come back to revisit this. This automatic reaction 2 is very deep, so this isn't the case because we have moved it across here. It's really deep right over here, and now it rebound to a level lower than the blue key level. So this may be an LPSY. Just put it as a tentative tag over here. And if it really comes further down, it would come to a point, the sign of weakness. So after what happened back in mid-late August, this may be the second time it's coming to this light blue key level of around 180. So that's what's happening underneath the bigger picture. And this blue line, you see it on Wednesday, the price found a little bit of support. People bought the dip and pushed the price back to above the blue key level. You see this long wick at the bottom, right? And then what's happening now, it may be a scenario where sideways trading is going to happen between these two blue levels before it comes to hit the sign of weakness and maybe eventually dying down towards a new accumulation. So I already mentioned the percentages right here in the weekly chart, so we don't have to repeat in the daily, because the daily just basically constrained by the weekly. So if the weekly is heading down, there's no way the daily is going to go up. So it can fluctuate during, like, this leg up in the weekly. This leg up in the weekly, it looks very clean in the weekly chart, but then in the daily, it's not like that. It's got fluctuations while it's climbing. So that can happen, but it's still within an uptrend. So price can drop within an uptrend when weekly is going up, but it can't go the other way, that drop deeper than the weekly. So for now, what's coming next would be a downtrend with some upward bounces, and I'm trying to see whether we can draw a channel box if some form of downward trend is forming. So as of this moment, we've got only 3 reference points, so this box may need further adjustment. So we've got this point over here, the other point right there, or these chunk of candles over here, and then this point over here. If I turn it to the line chart, you see it's basically the same principle. Bounces off between the two edges that forms the box, and right now it's trying to edge towards the blue key level, and that's going to give it, or give the box another touch, the 4th touch towards the ceiling. So if the price hits this point in the next 2 days, that means it touches the top edge of the box, and there's a chance for it to bounce back to test the light blue key level and also the bottom edge of this channel box. Looking at the volume, it's pretty consistent with the length of the candles. So I would say normal trading activity for now even is like a pretty long leg down in red that has broken all the uptrend support. So basically the tide has changed. So if I were to draw a box, the channel box, so you see all these previous channel boxes that goes up and down, right? There was one over here, but it's pretty wild in the middle. So if I'm to add back a box right there, that buying climax itself made it look like it's very crazy right there. So I have to cover this sign of weakness as well. And also the upthrust over here. Yeah, that's about it. We've got an LPSY right here at 0.1. This is close enough, but 0.2, 0.3, and then 0.4 at the upthrust. So right now, the price has fallen outside of this larger upward channel box, but reclimbed back into it, not knowing whether it can stay up there. If it can, that means the journey towards this upthrust of the distribution isn't over yet, but we already mentioned in the beginning when we look at the month, like the weekly chart, is likely not so optimistic going back to that level because it has gone below the 210 key level. I would prefer to see this rebound from this level rather than like poking straight through towards all the way like close to 180. That's not a very supportive sign for the bulls. You are hoping to see an upthrust of the distribution. And let's see whether I have missed anything at all. Yeah, the Bollinger Band Corner squeeze for the daily chart isn't there yet, but it can trade sideways for a bit and then show us the squeeze eventually. So time points, if you ask, we've got multiple here. Assuming it's continue to trade narrow range, edging towards this cross over here. That's basically the first week of October. We're like 10 days from that date. So anytime within from now till 10 days later, a breakout will happen if the price trades within this narrow triangle. So either it bounces back up to above the blue key level of 210, or it falls outside of this again. And the key is if this smaller downward channel box is valid, the price won't wait till the beginning of October to show us that, because there's another time point here, October 1st. It's actually before that, September 30th. So in 3 days time, a decision point will arrive. So what does it mean? When the price continue to trade within this narrow, this tiny little pennant over here, it has to confirm whether it's going to follow this downtrend that's newly formed. When that happens, it's not going to go into this zone. It's going to bounce off the ceiling of the box and come down. Obviously not necessarily straight down, but it can edge along this top edge of the downward channel box. So in 3 days time, remember, we'll know whether it's going to continue to head down, and the price point for this is very close to the one on top here, around October 7th or October 8th. So first time point, September 30th. Second time point, somewhere around October 7th. So depending on which triangle it has ended up into, the price has ended up into, the breakout events would happen according to those time or dates. So in 10 days time, we'll see two breakout events happening. One to confirm whether this downward trend is true. The other is to confirm whether the price is going to break above or below the two key levels, one at 180, the other at 210. So quite a lot of information this time when we look at the daily chart. It's pretty interesting. And remember, the big picture is still within the uptrend, but then the momentum seems to be getting questioned. So look at what happened back there for the second test in January. It started straight up and then eventually a smaller drop and then a run all the way to the sign of weakness. Hopefully it doesn't copy what happened back in January and poke all the way to the yellow key level of 125. Wish you good luck. Remember to set your stop loss. See you in the next session.